I'd love to welcome everybody to the Independent Investor Channel live stream. Super cool to be with you guys. Um, Navigating through volatile markets, certainly. I'm going to make sure that we put this product down as often as we can. Super important that we do that. And, you know, just keep everything in perspective that we've got going on with our opportunity. Super important that we hold true on our program. We're going to foot stomp some of those things that we're doing that's taking up our time, at least on the independent investor. I'm soldiered up tonight, no doubt about it. It's tough times. You know, you wouldn't think that the market had just rolled off less than 10%. For sure, it feels a lot worse than that. I do the calcs on the portfolio, and I'm like, wow, it really felt a lot worse than that. When we ended up doing the calculations week over week, which in the short term doesn't mean a thing. You know, I'm starting to get so weathered by this, and I think when people approach me and they say, you know, what's going on, and people typically, you know, they approach me more when the market's doing this. When the market's going gangbusters, they don't approach me very often. And say, well, how's the portfolio doing? You know, it's always like, hey, how's the portfolio doing? Right? It's the same as last year and 2 years ago and 5 years ago. It's the same, you know. But we adjust accordingly, and I don't know. It allows you to take things into perspective during times like this when you can see through the news medias that people's personal security is being compromised, right? So it puts things in perspective for you. It allows you to do your own personal reflection. There's so many different people from all kinds of different walks of life in this gallery, and you know, one of the main reasons why I do this project is I've had my fair share of ups and downs in life, right? And it hardens you, and it makes you appreciate the good when things are good, and it makes you acknowledge those things that maybe you perceive to be bad. Re-rack your perception a little bit. I think a lot of people expect things to be hunky-dory all the time. Is that really your outlook on life? Is that you just expect to be on a cloud all the way through life, and that it's just going to deliver things on a silver platter? See, that's the thing, is people who have been through ups and downs, they understand that the very nature of being against the grid, or being put to the grindstone, or being challenged in a number of different capacities, and in some cases challenged beyond the point of tolerance, in that, you know, you start to question, gosh, can I even handle this, you know? And I think it's times like that define us. They really do. I think, you know, it's never as good as you think that it is. It's never as bad. I say that all the time, and I certainly do mean it. I think life is a dynamic series of ups and downs, never to be predicted on the up and never to be predicted on the way down. It's just we prepare accordingly, okay, to to you know, deal with those injects as they come, and we control what it is that we can control. It brings me back to, you know, my time on the fishing boats in Alaska. Here we are, man. We're floating on a man-made, you know, piece of machinery. Let's be real. That's made of natural occurring wood, and you know, nets that we have mended, and engines that we have serviced. All these things that we have on board this vessel that we can control how well and how efficiently it runs. Okay. But when we put that net to the test, and we put it to the test up in the rigors of Alaska, we can't control whether or not there's going to be 10-foot waves that day that we have to overcome. We don't know if there's going to be 30, 40 knot winds that we have to overcome. These are things that when we put our best foot forward, right, creating our plan or our vessel, or preparing our vessel for battle, okay, then we have to at some point let go when we put that to the test. And it's the same thing with stock market investing. See, I think a lot of people, they want to prepare in a number of different capacities. They know that it's the right thing to do, and they would be right. They want to set up a plan that makes sense for them, and they want to put that plan into place. Okay. And it's easier to justify that said plan when it's put it into action and everything works out on the onset. Okay. But it's times in the short term that really do test every investor. Okay. And I don't want to come across as an investor that is somehow immune to what's going on. I don't want to sugarcoat what's going on. What's going on from a geopolitical perspective is horrible. And I'm monitoring the situation very closely. I am from a humanitarian perspective because I have a heart. Okay. But that is separate than my stock market investing thesis. And it's not just raising interest rates that has me concerned or monitoring the markets with heavy intent and looking at it and acknowledging that right now, sitting across from you guys on a Friday live stream, that we are in fact off 10%. Year to date, we're off 10%. S&P and Dow are about the same, off just a little less than 10%. This would be the time when I would start to supplement my dollar cost average strategy with doing a little bit of strategic buying. If I was saving to cash for many, many months, or in some cases, I saved for the majority of 2021. I let said plan be put into action over the course of 2021, only to be put into this position here to monitor markets. Now, off 10%, am I really that excited about jumping into markets with only interest rates being on the horizon as being that headwind to markets? No, I think the real estate market is too high. I think it's running really hot. And if anybody has paid attention to the stock market, it ran hot there for the latter couple years. Going into 20, after the pandemic low, it was on fire and it was red hot there. Okay. There was a lot of speculation in the market. It was no matter what made sense in market action, it didn't matter. We were buying it and we were asking questions later. Now the opposite is happening. Everybody is selling markets and asking questions later. And what I posed in the WhatsApp group, my private WhatsApp group tonight, was that perhaps maybe that comb over the market is actually presenting some opportunities to folks. And I think it is in everybody's best interest to continue to dollar cost average the markets no matter what. I mean, you're buying cheaper shares now. That's something that I do just like sleeping. Okay. I dollar cost average the market, but this is where I look to take some strategic spots in certain capacities in the market and look to kind of accelerate my buy points. And 10% is my first look at the market. If we continue to go down 20% and we enter into more of a bear market type of territory, which could be a little more prolonged, then I would look to be a little bit more aggressive as the market rolled off. But I'm going to continue to dollar cost average those markets as we go forward. But I do have a special guest. I'm going to bring Junior on. Junior hasn't been with the channel for a while, and he just popped in. I heard the ding, and I popped over there and saw Junior's big smile. And he's got reason to smile. I don't want to steal his thunder, but he's going to come on and we're going to have a discussion this evening, really just kind of chill out. I know that the topic at hand tonight is stock market crash and yada, yada, yada. The reason why I put that right out there out front is to really, really just help investors understand that, these times, man, they come and go. And some of the best minds in investing would suggest you doing nothing, holding true on the markets. Where it feels like it might be better to just stop the bleeding and just sell everything, you're still going to be pressed with a decision to get back in the markets if it does continue lower. And you're going to miss out if we do one of those rolling reversals. And you're betting against the stock market that's had 100% success rate in coming back from corrections, bear markets, and prolonged recessions throughout history. It's just that simple. They've all proven to be those opportunities where you should have just either stayed the course or actually bought more. Guys, so stay with us. Be back in just a minute. We'll bring Junior on, have a candid discussion about life, liberty, and the pursuit of happiness. I got my brother from Jersey in the house. Junior's in the house. Welcome, Junior.
Thank you, Ryan. Thank you for having me tonight. I want to say happy Friday to everybody on the live chat. I want to again thank you again for having me on, and let's do it, man. It's a blessed day today. Um, so let's do it today, man. Let's talk.
You you got some good news, first of all. The important stuff, Junior, I might add. So we're going to put stock market talk aside for just a second. I'd love for you to share your newest development in your life, the number one, the most important development in your life. Junior, take it away.
So the number one, so the reason I haven't been on for such a long time, I recently just got married. I want to say it's been 2.5 weeks. I can't do the math. I got married February 20th, Sunday. So I got married to my lovely wife, Ashley. It was a beautiful wedding, a long time coming. I don't know if anybody that's married here. It's a long process to get the wedding as far as planning, guests. So stock market aside, if you want to make money, just hopping into the wedding business. Photographer, videographer, day of coordinator. If you work at a hotel, server, bartender, you name it. Just join. No matter what happens in life, you will always make money in the wedding business in one shape and any way possible. So I would say join the wedding business, guys. It's a lot of money, but it was worth it. And yeah, it was just a
Yeah,
beautiful
man.
wedding. Just a lot of changes. I had, obviously, I have a new job down in Delaware. I'm delivering liquor. I talked to Ryan earlier, guys. I did my Roth conversion, which I wanted to talk to you guys about later on tonight. How important it is to do a Roth conversion, especially during these times when the markets are down. The advantages as far as taxes and doing individual stocks in a Roth IRA, how powerful that can be in the long term. So, but we'll talk about that later. Just wanted to just it's not about me; it's about servicing everybody here and helping Ryan out because Ryan's been doing that every Friday, helping you guys, especially today in the past few weeks. So I want to say prayers out to people of Ukraine or anybody that you know has been affected. What's going on with people in Ukraine and Russia? I know it's whatever. Besides politics and all that stuff, I just put my condolences and people that have been greatly affected. So that's first and foremost. And yeah, just as far as stocks,
Yes.
you know, oh, I see Kyle there, my Facebook bull. So stocks like that, yes, stocks like that, and many others, I believe, are great opportunities. Or if you haven't started a position, looking forward to starting those positions. So I want to.
Yeah, I think, it's amazing to me. I probably have, I don't know, 268 live streams. I don't know. I'm going on 1,000 pieces of content. What's funny about my opportunity in YouTube is I love doing it. I've gotten more polished. It was kind of nerve-wracking when you first start a little bit,
Mhm.
and I like the fact that I've let some of that go. You know, okay, I'm not perfect. No, no, I'm not. I never thought I was, but I think you have this idea when you get on YouTube that you got to be all polished and perfect and
Oh,
look the part and blah blah. The fact of the matter is, man, that people's application is different. People's situations are different. People's situations as a whole are dynamic. And so I think if we can throw these little nuggets out there of, maybe how that's why I like having you on, Junior, because you always share kind of how you participate in the investing opportunity. You share a little bit about your occupation, right? You're not the only truck driver out there in the world, right? So, people can kind of relate and say, how are these people making sense of all this? And I think it's times like this where I would like to say that I'm providing the most value. At least let me be humble and say I hope that that's the case. I do, because this has got to be hard on some people.
mhm.
You watch people invest for, 10, 12 years in a bull market. People scratch together a little bit of a start, get a little starting capital, and boom, they invest into 2021, and bam,
Yeah.
we get this has been a pretty volatile drawdown. And for me, I mean, it's the tune. I was down $6,900 in one day today. Those drawdowns are serious, and they compound. At a couple days this week that were up, and it seems like big whoop-de-doo, you know. the sentiment is rather slow. It is rather low right now, and I think some of the selling is unfortunately some panic, exacerbated selling, of course. And I just think we need to teach people, man, to be strong
Yeah,
and hold through and just weather these volatile times. It always gets better. Just keep
yeah.
your eyes on the horizon.
And that's the thing, right?
But
So there's two things as far as if you've been investing, obviously for 5 years, 10 years, especially if 10 years, most people have seen obviously volatility, either correction or obviously we're going now to 2 years with the pandemic, right? In 2020, when the S&P just dropped 30% in 1 month, right? If I'm not mistaken. Hey, what's going on, Ashley? Good evening.
shout
It
shout out to Ash. She's my newest WhatsApp group member. She's my
yeah,
newest, and she's kind of one of those investors that I allude to that may get involved in markets now,
mhm,
and is like, man, is this what it's about? And it's hard to tell people, no, that this is not what it's about. But how is it that you can believe any other thing than if you're looking at it every single day and you're like, man, alive, it doesn't ever feel like anything's ever going to go up again? I think those are natural feelings, and I think I always just say, look, wait, and that validation will be right around the corner. You know what I'm saying?
yeah,
So
and what I was
good to
gonna
see you,
say is
Ashley.
it's and especially with markets now, these it's experience and exposure. So what I mean by experience is if anybody invested during that time of 2020 during the pandemic, things were shut down, right? That was one of those things that it hasn't never been in the future where the economy and the US and the whole world just literally just shut down, right? So you couldn't go to the restaurants like you used to do. You couldn't go to the hotels and all these leisures. But what happened? It rebounded dramatically into the Aprils and Mays. So that's experience. So if you've been through that, going through this now, yes, it still hurts, right? Because obviously you're seeing your equity go down. But if you're invested in positive cash flow companies, that's why myself, I'm not telling people what to do. I am a fundamental investor. I look at balance sheets, I look at cash flow, especially companies. If you can pay off all your debt, do you still have cash still on hand after paying on debt? If you do, you are in great position because the reason why is because they can't go bankrupt, right? And you have to have a company that has a moat. For those who don't know what a moat is, of course, a moat is something that protects the company, right? That has a competitive edge. So I still invest in Facebook because I like that they have a branding moat. Yes, I understand there's negatives behind Mark Zuckerberg. People are not trying to wait, I guess, the whole 10 years or so for the metaverse. But if you look at Facebook itself, like, I'm just using an example, it is a huge branding mode. Look at your bag of chips. Um look at any supplies. What does it say? Hey, please follow us on Facebook, Instagram, which is owned by Facebook, Pinterest, and Twitter. And also too with WhatsApp and Oculus, starting with WhatsApp, that is huge for international, especially people in the US that have people, family members in Mexico, India, which India, I believe, by the way, is the number one country that uses WhatsApp. When you look at those dynamics, they're not going to go out of business. And when you look at Oculus and the metaverse and VR, that's real. I don't look at it as like, wow, that's just smoke in the air. These are real things that are going to be transitioning, augmented reality. And if you look at Facebook's balance sheet,
Yeah,
$40 billion in cash, if I'm not mistaken. I think
yeah.
Kyle can correct me if I'm wrong. 40 billion is not a small number. So things like that.
No, and they're still
I
they're still growing their margins. That's the scary part is that they're increasing their margins quarter over quarter. They
Mhm.
just had a small bottom line. They beat on the top line. They missed a touch on the bottom line, but it's not like this company was priced for perfection at all. I think it's actually slipped to now. I thought I saw it was trading at 14 times today. I'm like,
14
okay,
times.
we're starting to get a little silly here. Um, and every now and then you'll look at the market kind of like I did the last couple of years, and I was like, this just doesn't feel right. It just seems like everything is too good because
Well, yeah.
I've been through this many, many times before, and when it's good, I get a little more skeptical. I don't get happy. I get skeptical
Mhm.
and I get very careful. The more out of touch the more careful I get. It's times like this where I'm monitoring and saying, okay, maybe we're in first gear. Maybe it's time to ramp up a little bit in certain capacities. You guys do have to understand too, I do have somewhat of an established portfolio. So a lot of my focus right now is in active investing because
Mhm.
my passive investing is doing exactly what I've asked it to do. And it's providing me that luxury of staying invested while I'm focusing in on my active investments. But I just want to highlight a couple here. We'll get to Ryan's real quick, but Ben says 250 more bullish. I thought the quarter was fine. Again, it's kind of indicative of everything else that is reporting good numbers, but is just wrapped up right now. It's just hard to justify stock going up right now with what's going on, especially geopolitically, which I think it is the focus. I mean,
Yeah.
when you start talking about affecting the potential of, nuclear plants and things like, I thought that really sent a tremor today through the markets, especially in the pre-market. It's just not good. It's just not good. And there's a bigger perspective at hand. And I think that's dominating the conversation right now. I haven't heard the inflation discussions right now because obviously this is dominating our conversation right now. But
Mhm.
I do want to address this, Ryan. Let's probably target for 24. So Junior was giving me a compliment before I came on live, and unlike analysts with an agenda, okay, I'm independent in my thinking. I reserve the right to be wrong, and I reserve the right to be right. If I'm wrong on this, I revise into 2023, and it will get there. Mark my word.
Mhm.
If things transpire the way that it's transpired up to this point, it will be the unknown catalysts that recognize the true value in a company that I think is firing away. And it was solidified on the last earnings call. If you guys missed that or you want to catch it, I highly recommend that you sit and listen to their discussion. It was fabulous. They're doing amazing things, looking to grow earnings 200,000 this year, 2 to 3 million, and then projections going into 2023 is going to be really the catalyst when they start to roll out their flagship product. But I don't want to dominate the entire conversation with this. I will roll out my Sunday highly on video, which I typically do every Sunday for those patrons that are interested in it. Um, this is just where I see fair value, and see, I have the luxury of doing that from an independent perspective because I don't work for the man. I work for me. This is my project, and I get to offer my objective opinion. And my numbers are fairly conservative on what I'm looking at market grab, what I think they could realistically do, and trying to price this company right now at $4 or $12 or $24, I think is futile in nature. If they don't have bottom line profit, right? They just started making revenue. If they don't have bottom line profit, then it's an educated guess. And with all due respect, my educated guess is absolutely prudent, again, for no other reason that I don't work for Goldman Sachs and I don't work for Morgan Stanley either. I work
Mhm.
for me. If there's something to be taken away from that, guys, the more independent you are with your thought, the better off you'll be. Make this make sense for you. Don't make it make sense for anybody else. You want to agree or disagree with me? No problem at all. But be independent with your thinking and dare to be wrong, dare to be right. No doubt about it.
Oh yeah.
It's a good question. Thank you, Ryan. Appreciate
Yeah.
that.
And also, I wanted to mention people now. So I want to put a disclaimer out. I'm not a financial advisor, nor I'm a fiduciary. But what I can put out is, guys, if you're thinking about a Roth conversion, I think this is the time. I recently just did my Roth conversion last week. I took it out from M1 Finance, went over to Fidelity. I love Fidelity. I love their brokerage. It's a credible brokerage. But going on with the Roth conversion, the S&P and the Dow, I believe, is 10% down from its recent high. The Nasdaq is what, close to, I want to, I don't know if I have the numbers right, but I want to say about even more than that, like close to 20%, right? If I'm
It
not
is.
mistaken.
It is. Yeah.
So,
Tech has been
and
rolled off really hard. Yep.
and if you think about individual stocks, a lot of tech individual stocks have been automatically slashed 50% or lower. So if you have stocks that obviously if you did your homework, not telling you guys which one to pick, but if you did your homework, you did the fundamentals, maybe now is the time to do a Roth conversion because two things, right? Tax brackets now are historic lows, and you get to save yourself to when you do the, I'll see if anybody doesn't know, when you do a Roth conversion, you're doing pretty much pre-tax, you're moving pre-tax investments to after-tax investments, whether it's ETFs, index, or individual stocks. Once you have that locked into the Roth IRA, you pay the taxes on the conversion, but in the long run, you save yourself taxes when you get to that age of 59 and a half. I myself is 35 years old. So legally, I'll have to wait till 25 years. Doing the math correctly, I had a few drinks. I want to say 25 years to get to 60. So 59 and a half, 60, before I am legally able to take it out tax free. Well, if I look at how the stock market is, compound interest, what you have is time. Time is your best friend. Doesn't matter what investment you have. The longer you hold an investment, in my opinion, the greater the investment numbers are going to be. I just actually showed a few coworkers Microsoft, right? Not to say, most people would have known in 1986. If you would have held Microsoft in 1986 to now, I believe it was you would have got a 230,000% return on your money. Think about that, guys.
Yeah.
230,000%. That's just blows my mind. If anybody, if I know it, and probably they'll never say it because they were hiding, but anybody that held that stock from that year, 86 till now, to get
Yeah.
that percent is just astronomical. I mean, there's many others. I believe McDonald's is 60,000% return or something like that. Like just
Oh yeah.
in the long run from the 70s. So what I say is do the Roth conversion. If you guys are not familiar with that, there's many videos. You can ask Ryan. It's really easy. The only thing I would say is make sure if you do it to have cash on hand on the side to pay for those taxes, depending on your tax brackets.
That's
Um,
right.
but if but if you do it, you can save your, especially if you're younger, you can save yourself taxes when you get to 59 and a half. Because me myself, I do not want to pay Uncle Sam at 60, 65 years old. You bust your ass at work. Why pay more? But that comes from exposure. So I'm telling you guys, Roth conversion, if you have an individual stocks that you are convicted, you did your homework. Again, you did your homework, you are going to make out
Mhm.
great. So just wanted to put that out there. I'm just putting the
No,
gem out there.
no, it's really sound, and I think just to foot stomp what you're talking about with kind of having an anticipated tax liability in your future at zero really means a lot because in a traditional IRA, you're going to be subject to some level of tax in the future,
Mhm,
but it's not set. Okay.
mhm,
It's at the effective rate date later on in life, and effective is synonymous with variable. Okay. So for me, a Roth IRA really says, you know what, when I'm 59 and a half, I want to guarantee my tax bracket at zero to the government, right?
mhm,
Because there has been scuttlebutt over the years on doing away with the Roth IRA benefit, right? To challenge that. Do I think that'll happen? No, I don't. But where it could be subject to change in the individual retirement account program is on the traditional side of it when they know that that effective tax rate is going to affect those required minimum distributions
mhm,
at 72. I think they increased it from 70 and a half, I believe, something like that. Um,
mhm,
but eventually you're going to be on the hook, and the government is going to say whether or not you want to take those liquidations or not, we're going to force you to take those liquidations, and you're not going to get to pay the effective rate, which is typically lower
mhm.
the older you are, because your income for the most part has come off a little bit. But why keep that open ended? Wouldn't that be a tough thing in your 70s to have the government say, hey, we're doing away with the effective rate at 2.2% and we're raising it to 5%, where you've been under an impression your whole life. And I say, don't even mess with it, guys. There's some schools of thought on both sides of the house, and it becomes very complicated on what IRA you go with, whether it be traditional or a Roth. And I always default to the Roth for that very simple reason. I would just rather cap my tax liability at zero and live
Yeah.
to fight another day. It's just that simple.
Well, Ryan, I'm gonna comment. I believe his name is Dark Shadow. I see. It says
Yeah.
Junior is the limit still 7,000 on Roth conversions. So let me answer that real quick. And correct me if I'm wrong, Ryan. So when you do a Roth conversion, there is no limit, right? Because when you do a Roth conversion, what again? You're moving pre-tax money, whether it's from a 401k or traditional IRA, you're moving that over to a Roth. There's no limit on the Roth conversion, right? You just have to pay taxes on the money that you move over, and that depends on your tax bracket.
Yeah.
Depends how much you make. You add that in. So I'm not a accountant or a fiduciary or financial advisor. That you would have to talk to your tax preparer, or if you do the research, you can find out your tax bracket. So when it comes to Roth conversion, there is no limit. When it comes to Roth contribution, if you are under the age of 50, you can only contribute $6,000 per year. If you're over the age of 50, you can contribute up to $7,000 per year. That's what's called the catch-up phase, until you get to the age of 59 and a half. Another rule is, I'm sure some of you may know, but if you don't know, if you contribute money to a Roth IRA, you have to do the 5-year rule. So say the limit right now is 6,000. 5 years, you do it's 30,000, right? So 6 times 5 is 30,000, but your investment grew 60,000. Not recommending this, but in case an emergency comes, you can take up to 30,000 of your contributions penalty free, tax free. And the reason I'm going to break it down, the reason why it's penalty free is because you waited the 5-year rule. That's the 5-year for the Roth. And the reason you don't pay taxes is because that money's already been taxed. So in order to do the contribution for the Roth, you have to have earned income, W-2, like, obviously working W-2s. So I saw your question, Dark Shadow. Conversions, when you're doing a Roth conversion, is different than a contribution. If you're doing a conversion, if you're doing 50,000, 100,000, there is no limit. Now that's up to you how much you want to pay in those taxes. But just to answer that question, no limit on the conversion part.
Yeah.
Am I right? Yeah, I want to say that. I think I'm right. See, I've been only doing this for 2 years.
You got a bunch of people here who are like, you need to start your own YouTube channel, Junior. I think the cool thing about it is, and I've always tried to be kind of humble about the opportunity, and I understand that I'm just sharing one singular perspective, which I think can only go so far. And that's why you're like, hey, is it okay? And I was like, I always welcome anybody on the channel because it's cool to pulse in with how other people are applying. It's just super cool, and I think those different perspectives just makes us stronger as a community. I really do. And I just thank you for coming on, and you've been with me a while, Junior. You a friend of mine. We've never met in person, but I love good people, man, and I love hearing stories from all over. I'm one of those guys that are hardworking, and I see it in others, and I think those are the common themes that bind people together. I do.
Yeah.
I wholeheartedly believe that with all the divisiveness in the world, which I just shake my head. I can't let it into my head because I can't comprehend it. And I think at least I hope there's a lot of people out there that think like me.
Yeah,
I hope.
and you do. I've told you, Ryan. We met. We've met online, of course. I'll never forget this February of 2019. It was you, me, and I forget that. I think it was Jamie on. That was the first time I ever came on the channel, and the reason why I like talking about you with this, because unfortunately, except for my wife and very few people, I don't get a chance to go in depth with the stock market, and I get it because sometimes it goes over people's heads when you have jargon and language that people in CNBC, Wall Street, you name it, that use certain words that can go over people's heads. Because the biggest thing is when it comes to the stock market, and this is maybe my perspective, is not taught in every public school. Now, there's some private schools and some affluent schools that do teach the stock market, not to those fundamentals, but because of the demographic. But it gets obviously deep, and I'm not going to get into it. But what I'm saying is, like, I love your channel because you are doing a service, right? You're not here to it's all, I understand, with YouTube, right? YouTubers, it's money, right? When you're putting out content, if you have Patreon, the whole thing, I get it, it's money. But you're doing this on Friday night because it's not just like, hey, I'm doing this because I need the money. I need people to drop in money. I need to drop in the Patreon. It's the service, right? And I believe in good karma. I don't know if you ever heard of Tony Robbins. He's somebody I love to listen to because he's all about service, right? He's big into financial literacy, but also
the lion.
He's
the lion.
spiritual.
Hear me roar. Roar!
He's a motivator.
Tony Robbins. Tony Robbins is number one on my list, man. I've shared Tony Robbins with a lot of people.
He's one of those guys where I love to go to that trajectory, right? And I never realized how important not just stock market but mental health, right? Just talking to people, right? Sometimes, when you talk to people, we all have bad days. We go through stuff personally, financially,
Yeah.
family, whatever the case may be. You talk to somebody, you're like, oh my God, they're going through a lot. I was complaining about something I thought that was big, but it's so minute to what that person's going through. And if you just talk to people, you just generally just have integrity, just be like, "Yo, everything's gonna be okay." You provide a service indirectly without you knowing of helping people, and that's what I love about your channel, and that's why I love to hop on to talk to everybody here, just to do the talk about the Roth. May be small, but that can change somebody's life in 20 or 30 or whatever, however, how old you are. That can change your life where you don't have to not only um pay taxes, not pay taxes when you get to that legal age, but be like, you know what? I learned this from this guy, junior stock investor. I'm going to tell this to my friend or family member. Therefore, we're spreading a word out. And to me, I get more excited when people have high returns than myself because it's not about me. What this is not about
Yeah.
us. It's about everybody else here. It's about servicing, and that's what it's all about. And I love what you're doing. And I've always, even though I haven't been on the channel for a while, I've always stood by what you do because you're not
Yeah.
capitalizing on anybody else's weak emotions when it comes to the market. You're giving good, honest perspective on what to do when it comes to markets, good or bad. So I appreciate that from you.
I really appreciate it, man. But want to try to focus on the successes of others. There's no doubt. If I don't think there's potential for this stuff to work, then what are we doing? I'm not really looking to waste my time, Junior, and I'm not looking to waste others either. People's time is valuable, but there's people who are in here every single Friday. That motivates me. Now I'm motivated. I've said many times I'll come on and do the live stream, and I do it for two or three people, which I used to do
Hmm.
when I first start. I'd get on here and there'd be like six people, and I'd be like, six people. This is awesome.
Yeah.
This is like a small classroom. This is awesome. But now look at this. I mean, there's 70 people in here, and there's a consistent
Oh
clip of
wow, that's a lot
people
of
who
people.
watch this every. Yeah, it's but it comes in ebbs and flows, on the channel, and as long as I'm putting it out there consistently, it works for me. But I always try to foot stomp um, what works for people.
Hmm.
People really need to understand that it has to make sense for them. If you can come on and you can see that it makes sense for me, that's great. But you really need to dig a little bit deeper. And sometimes that turns people off. I,
Yeah.
I think the topic, as you alluded to, turns people off in and of itself. There's a stigma about finances that I've never been able to really put my thumb on. It's revolutionary when we break the ice with somebody who is subject to those barriers and don't want to open up just because they think society says they can't open up about their personal finance and maybe even their deficiencies. People who have a little bit of student debt, or they have deficiencies in spending, or they have some habits that need to be broken. I can go on and on and on. Man, it's okay.
Hmm.
There's nobody in this community that's perfect. I can tell you that much right now. We are human beings. We are flawed by nature. All right. The whole idea here at its granular nature is try to get those common themes that work for the masses. And the stock market is not something that you can pussyfoot into and
Hmm.
expect to succeed at. It just doesn't work that way. It'll chew you up and spit you out. You got to be tough.
Yeah.
And you
And
got to approach this stuff with those fundamental swim lanes, you know, to stay in. And once you kind of define that and you step into it defensively, you can kind of learn the process as you go because there is no substitute for experience in the market. And that's what we're trying to do is get individuals that experience in the market, let them experience it for themselves in a way that's low cost and tax efficient
yeah.
in its most simple nature.
And Tony Robbins and in his book, I'll give another gem. Guys, either read or listen to Audible. Tony Robbins' book is called Money Master the Game. He talked about finances as being taboo, right? So finances, religion, race. Obviously, there's a whole different, obviously, bunch of things that people are uncomfortable talking in social settings, whether it's a get together, barbecues, gatherings, whatever that may be. Finance is one of those taboo things, right? Because nobody goes around saying, hey guys, I make
Mhm.
X amount of money or I do this. It's uncomfortable. And I get that. What I do is when I talk to people, especially with financial literacy, I never ask them how much they make because it's irrelevant. That's my opinion. It's irrelevant how much you make. I
It
always tell
is.
people, hey,
It is.
the only thing I can tell you is, hey, there's an easier way, right? Because if you're not exposed to investing, you're not gonna people. I've told you the story. When I used to see the S&P, Dow, and Nasdaq on TV, I had no idea. I always assumed that, hey, it's for business people, it's people that made cuckoo bucks, not knowing that when I was driving a truck from an old company, listening to these things, having the time to listen to these things, putting two and two together, I realized, oh, the stock market is easier than I thought. And people say, well, right, what do I invest in? Biggest thing I could tell you, invest in the circle of competence. Invest in things you consume or things you know that make money no matter what economy you have. If it's a bad economy
Sound.
and they're making money, you go invest that, whether it's tobacco, alcohol, gambling, because those are the three that people spend money on, whether it's, especially
Yeah.
when it's bad, and it's kind of sad to say. And I had mentioned before, the wedding
Yeah.
business. Find something that people are going to spend money on when it comes to weddings, right? A stock I can put in is maybe Airbnb, right? People are always going to stay somewhere, like, obviously hotels too is another big one. The Marriott, that's my personal choice, the Marriott. But you look at
Mhm.
Airbnbs, that's a disruptor, right? And that's a stock where, it's going to take some time to get to those big levels. I mean, I'm sure it's doing good now, but it's one of those things where like people maybe might not only just might not like flying, but like, you know what? I want to stay in a city. I might take a road trip and stay in a city that's not too far, maybe an hour or two, and experience the whole Airbnb, a whole space, maybe bring some friends and family. Look at companies like that, or look at companies. Alcohol is easy. I look at Sam Boston beer.
Yeah.
I look at Diageo brands. So if nobody's familiar with Diageo
Oh
brands,
yeah.
they own
Yep.
Kettle, Crown Royal, Ciroc, Don Julio. Um, I only say that because that's my circle of competence because I deliver alcohol and it's through the roof. And stocks that I like, obviously I mentioned Facebook. I just entered a big position in PayPal today. Visa is another one. Visa's great. I know it's one of those blue chip stocks and it's not one of those, it's not a 10x stock that can run up within a year or so. But Visa, what I like about Visa is another gem is no matter if it's credit, debit, um, they're a middleman, so they make money when they give out their name logo to Bank of America, Chase, and anytime you use a debit card or credit card from Visa, the merchant, which is the business, has to pay Visa fee. So I never knew this because obviously it's not taught in school, but when you go to small businesses and you use a credit card, they're like, hey, we got to charge you a certain percentage. Well, they're putting on onto the consumer. And when you go to Walmart or Target and you swipe your Visa, debit, or credit card, doesn't matter. They don't tell you, hey, you have to pay extra. It's built into the price. So I put two and two together. I was like, oh, so that's how Visa really makes its money. It's from the merchant fees. How many people use Visa, debit, and credit? Most of us do, whether you have Chase or Bank of America. You What does it say
Yeah.
on it? Visa. That's a moat. And it's a
Mhm.
duopoly with MasterCard. But I like Visa personally because no matter what happens in the world, people are always using credit cards. Cash, yes, people still have cash. I understand that, but people are always using credit or debit. Doesn't matter. So to me, that's a stock that I'm gonna hold for a long time because no matter what happens, they're gonna make money on the merchant fees. But
Mhm.
that's not broadcast in the mainstream of things. That's something either and I'll give another gem. Netflix explained that. They have a series called Explain, and it's money. And they talked about credit cards and how credit cards make their money. Either you're a transactor or a revolver. It's kind of deep. Transactors are people that pay off a credit card right off every month, and revolvers are people that hold a balance for years and you pay all that interest. Don't do it, guys. It's like 18, twenty
No
percent
doubt.
what APR. It's expensive.
Yeah.
But yeah,
PayPal, Junior.
Yeah, PayPal. Yeah, I just entered that position today. 78 shares. Hopefully it goes down more so I can buy more. I'm blessed. I'm not here to gloat or anything. I'm very blessed because just it's from an old 401k that I rolled over to a Roth conversion, and instead of cashing that money out, I took the time to educate myself and just put that money to work for me for 25 years. One of my friends said, "You're crazy as hell waiting that long." Well, there's nothing else that I need. I have all the things. I have my wife downstairs. I have all. I'm alive. I'm healthy. I'm one of those guys that don't
Yeah.
need big materialistic things to feel fulfilled in life. This right here is my fulfillment, is to help others. And that's what it really is, to help others. Hopefully, if people today, whatever I put out today, hopefully it's like, hey, I never knew you could do that in this account or this or that. I never knew Visa charges a merchant fee. Some people don't, but whatever it is, whatever value I brought in, I hope that you guys take from it. And I hope you compound it to others, give it to others too. Really do, because we all work hard. I don't know everybody personally, but we all work a 9 to 5 job, earned income, doesn't matter if it's salary, hourly, commission. We bust our ass and we miss out on events too. I'm sure most of us have missed out on certain events growing up because of work. And I hope whatever I say or Ryan says as well can help you guys out in the future. I really do.
Amen to that, man. And I think it's interesting. You said, "Oh, I bought these stocks," and then you apologized right up front. I'd like to move to a place where we can talk a little bit more openly about stock purchases,
Hmm.
along the business thread. I don't think that's something that needs to be apologized for. I just think I'm always quick to acknowledge how much of a luxury it is to participate in financial markets, but I think there's somewhat of a stigma
Yeah.
about retail investors, especially, and just folks that are earning that every day, job, earning that living, going and
Mhm.
working hard, etc., owning stock. I'm gonna say it again: own stock. It's all right. And some people are probably tuning in, and I know there's going to be at least a few that tune into me for the first time and are catching us for the first time, Junior, throwing down tonight, and they're going to be like, "What did he just say? Did he just say that I can own stock?" Yeah, man, I'm talking to you too. It's a beautiful thing. And I know a lot of these community members have probably evolved with me. How do I know that? Because I've evolved myself. I've made it even more commonplace for myself to talk along these lines so people aren't so scared. I don't care if you make 25,000 a year. I don't care if you make $100,000 a year. I certainly don't discriminate. I want to make this opportunity available for all people. And I don't care if it's 10 shares or 50 shares or 100 or more. You see what I mean? There's always a relative plan for
Mhm.
anybody out there. It's just that the key thing is you got to get your mind right. You
Yeah.
got to get the philosophy around investing first, and then the goings on that happen inside the account, like a VOO, a Palantir. I did buy this week actually.
Mhm.
Entered in a nice 400 share position. I just think it's rolled off way too much. But when you look at 3M, and we talked REITs before and utilities before,
Mhm.
Junior, right? That's one of the major sector specialty ETFs that I own in each of my respective larger Roth accounts, the utilities and the REITs, and they're doing great,
Yeah.
you know.
And
But we
tax
need to
free. Yeah, tax
it's tax
protected.
free. We need to understand these benefits like it's putting on your seatbelt. We really do. We need to
Yeah.
make it more commonplace across the community. And then when you talk to people, because you've alluded to it a couple times too, Junior, you talk to people and then you can kind of advocate for a little bit. Now you want to do it yourself first and really be that ambassador of the message. Then when people come to you and be like, "Hey, I heard you know a few things about investing. Can you help me?" You can
Mm.
say absolutely. You know what I mean?
Yeah.
Here's what you kind of need to look at. Here's a couple of books. Read this first.
Yes.
Prove your level of interest a little bit, perhaps, maybe, and then we can talk when you understand a little bit about what to expect from the investing opportunity. Because if I just told you, hey, buy A, B, and C stocks, you're going to probably go and fail. You're going to
Yeah.
do it wrong. You're going to enter the wrong account. You're going to be frustrated. That's not doing anybody any good. Go get a little bit of the fundamentals and then come back and we'll help you with the account and maybe a potential a couple of offerings. Sarah's offered my favorite right here in this little thread with VOO. If you can just own the S&P 500,
Oh yeah.
you're taking a major step in the right direction with regard to a low cost asset in a tax deferred or a tax advantaged account in the self-directed Roth IRA account. It's fabulous.
Yep,
Mm-hmm.
and set and forget it,
Great
and
stuff.
that's one of the things where um it 3 books before I go, 3 books I can write. Oh my, I can't even. I put my 3 over here as I was gonna say. So 3 books I recommend. It's Rich Dad Poor Dad by Robert Kiyosaki, Money Master the Game by Tony Robbins, and The Psychology of Morgan. I'm sorry, The Psychology of Money. Again, The Psychology of Money. I believe the author is Morgan. I forget his last name, but those are the 3 books I would recommend to people if you especially when it comes to money. Because stocks and money, before you even invest in stocks, you got to understand how the money works. That's just my opinion. If you understand this, how money works, then you'll be a great stock investor. Because if you're one of those people that love to be speculative and gambling, not to judge, because everybody has their own way, you're not going to be a great long-term investor in that sense, because you're going to look at money different as opposed to being a long-term investor and retirement accounts. I love retirement accounts because you can make it fun. I know some people are like, man, retirement accounts are boring as hell. I gotta wait all these years. Well, make it fun. Get some individual stocks. Companies that you know that make money are companies that you're gonna spend money. If you're gonna spend money in Starbucks every day, why not own some Starbucks shares? For me, they're building Starbucks everywhere. They're building it all over. There you go. That's a branding moat right there. Ladies and gentlemen, what Ryan has right there, what he just put up is called the branding moat. It doesn't matter how much Starbucks
Little,
coffee
yellow,
costs,
different.
and people are going to spend $6 or whatever it costs now these days for those Starbucks coffees. Just invest in Starbucks. If you're spending, excuse me, everyday money in Starbucks, invest. In my opinion, invest, because you already know they're making money. They're taking your money. Why not have some equity, some shares that can help you out down the road, you,
This
yourself, and your family?
Anonymous says, "Are we in for a frugal decade?" I hope so.
Yeah.
I think some people need to be brought back to the moon. I just don't think that's going to happen. I think we're in an extremely interesting time to be an investor. I think
Hmm.
technology is accelerating so quickly. I think if you were to go back 20 years, and if you would have said we're going to have companies like Facebook and Google and and the Amazon and the like, I think you would have thought you're crazy. Um, Exxon moving out of the Dow and Salesforce.com moving in
Yeah.
with cloud computing and where Microsoft has went. And if you would have said, yeah, we're going to have a half a dozen $1 trillion companies, would you have believed me? I just think it's a fascinating time to be a participant in markets. And to be honest with you, Junior, man, 20 years from now, I want to reflect back on this time and say, I made the decision to opt in rather than
Mhm.
opt out. It's
Yeah,
just that simple. I'll take my chances over the long term, baby. I
and
don't, I'm not going to be left on the wrong side of this decision point. I will not.
and
Am I going to make bad investments? Probably, but
mhm,
I will be a participant. There's no doubt.
yeah, and take what the market gives you, guys, no matter what happens. If, like right now, the market's been going down this week, take it. So take these opportunities to get into these stocks that have, especially technology. Technology, it has run up big time. Well, now they've been slashed 50, 60%. But if you, like I said, if you look at the fundamentals and they still have cash flow, start nibbling. Not saying you got to throw all your life savings in it, but start, yeah, even Microsoft. How people have been, the crazy thing, Ryan? I am up 58% on Microsoft, even with this drop now. I am still up 58%.
Yeah,
58% of
I know.
Microsoft. Isn't that
I
such
know,
a
brother. Yeah,
it's
it's
is
the
it
power
still
of
number
making
one or
money.
number two, like probably right behind Apple as largest
Yeah,
market cap company?
yeah,
58% in
yeah.
Microsoft with this downturn is incredible, because I bought it long time ago. I didn't buy any more. It was a set and forget it. It still is a set and forget it for me, and that's it. 290 is a great price from. It was, where was it trading at the record high? I would 300. Forget the was it upwards to 360 or 370? I might be wrong. I don't have the stock price on me. But yeah, Microsoft is one of those companies where to get it at a discount, it has to be the overall market going down, right? it has to with the S&P or those stocks that index going down, well, Microsoft will go down. So team money up for the
I'll
third.
take, yep,
Oh,
I'll
tying
take
up.
this one. Tying up money is not worth the tax savings. Um, it's it's unfortunate that we think this way.
Mm,
Um, Let me give you one of my roots and veins of the channel, and I'm going to profess something that is going to mean a lot to the group here. If I was a YouTube channel that just came on and talked about stocks and ETFs,
mhm,
I wouldn't do this project. I wouldn't do it. There's 500 channels out there talking about all kinds of different myriad of stocks and ETF opportunities and speculative growth and cryptocurrency, blah, 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 whatever they want. Okay. Um, Tax protection over your money is one of the fundamental truths over your money. And when you talk about a time frame of 30 years, it is one of two of the only things that are important in investing. It's just that simple. The other being the reduction of cost. And I call that wealth preservation over time. Okay.
mhm.
I use the example many, many times over, and I'll share this with the group because this is life changing. So listen up for 1 minute. I want your undivided attention. If you start investing at 20 for 40 years, okay, you invest with a market clip anticipated rate of return of 7 to 8% over a 40-year cycle, okay, and you get that rate of return with certain contributions over the time that can be $1,000 starting capital with $100 a month. For all intents and purposes, the compounding effect over that money will put you at seven figures over the lifetime. Okay, seven figures. In all actuality, most people opt for the services of a financial planner that will take 3% a year in management fees. 3%. So instead of $1 million, you now only have $400,000 at the end of that 40-year cycle. You have just given away 60% of your hard earned wealth to the financial planning institutions, and that is example 1x. 1x. Think about it 10x. Think about it 100x. Think about it 1000x. What I mean by that is companies like Edward Jones, they can operate with their 3%, which is $30 billion a year, $1 trillion of assets under management, with nobody walking in and out of their door and buying product. Okay. They don't need that because they're making their 3% industry average over their WAD, their $1 trillion. Okay. My suggestion is very, very simple. If you could take that same 7 to 8% rate of return and you could flip that scenario on its head, okay, and be that same 20-year-old that puts your money into a self directed Roth IRA account and you get that same appreciation over time, you're telling me that the tax savings over that $1 million at 59 and a half is not worth it. This is just where me and you will agree to disagree. And it goes along with your saying when you say tax or retirement accounts to people, they say, well, hell, I want to retire at 29. Okay. There is an anemic few that will be able to fire and retire at 29 and 30. Okay.
Yeah.
Me going on 17 years in a military career this year, I wouldn't have traded it for the world. I've never in my mind thought about retiring early in my life. I hate the word. I despise it. I know I'm going to be 59 and a half someday. There's no doubt in my mind about that. All right. But if I could go back and do it again, and this is where I want to circle back and share the root of the channel with wealth preservation, which you seemingly want to discredit here with this comment, over a 30 or a 40-year time cycle is somehow not worth it when the masses out there are giving away 60% of their wealth over the course of their life. My brother, something is wrong. It is wrong. And it's the very lifeblood of the channel. And it's the reason why I'm so motivated to come and challenge notions like this status quo in the industry, because I honestly feel like a lot of people don't know what it is that I know about stock market investing. And that's the God's honest truth.
Yeah. And that's when it comes to exposure. I mean, I don't anonymous YT, I'm sorry. I'm sorry you feel that way because, when you look at it's all about math, right? When you look at numbers as far as Roth IRAs, traditional IRAs, 401ks, you just It's out there. It's not like anything that's we're not making this up. It's out there. You can research it on Google, books and everything. When you do pre-tax, you save all that money. Yes, you get a tax break, but when you get older, most people when they work, when they get older, they're not looking forward to as far as making less money. They're looking to make more money. Tax rates, we're not going to know what tax rate is. So I'm not going to pretend, Ryan's not going to pretend. No one here can predict, hey, these tax rates at 25 years from now is going to be excess amount. We don't know that. It could be lower from now. But why would you give all your gains, all your money away to Uncle Sam when you're working your ass off, where you can do it now in a Roth IRA where it says you can do this for until 59 and a half after tax money. So yeah, you won't get a tax break, but you save yourself when you get older to conserve not only money for yourself, but you can pass it on to your heirs. You can pass it on to your wife, your husband,
Yeah,
whatever
okay.
spouse. You can pass it on to your kids legally. I'm not making this up. You can pass it on to your kids legally or whatever family member, and they can enjoy the fruits and labor of a tax-free, and that can start a generational wealth building vehicle for yourself. I just don't, but at the end of the day, it's exposure. Also know for Roth
Yeah,
IRAs,
for sure.
there's an income ceiling. Yes, there
Yeah.
is. So yes, he's right. So when it comes to a Roth IRA, I believe it's if you make more than 146,000. So correct me if I'm wrong, anybody in the chat. If you make more than that, yes, you
It's
can't
130.
contribute.
Yeah.
Yeah,
Yeah,
you can't contribute
130.
that, but they still have backdoor Roth IRAs. I'm sure some people are
Well,
familiar with
here,
that.
here's the thing. I want to offer so Chase is really sharp, man. He's been with me a while, and thank you, Chase, for your insights. You're really savvy, really sharp investor. I want to go back and kind of challenge another notion in that if there's the masses out there that can comfortably fund that 6,000 per year to a Roth IRA, then I'll eat crow. Okay. But all of these people who are starting Robinhood accounts and circumventing their Roth IRA to start a Robinhood account, which to my knowledge, to this day, has not rolled out the option of a Roth IRA through
Nope,
Robinhood.
you
Okay.
haven't.
Now, here's the deal, folks. And I don't mean to be pompous. I don't mean to come across like an asshole, but I'm right. Okay. Insofar as people need to check their order of operations. Okay. You want to have a brokerage account? Hell, I think I have a half a dozen of them. Okay. But I can comfortably fund myself and my wife's Roth IRA with 12,000 January 1 every year. Now, if you can say that, great. Then you can start to pick fun at the Roth IRA, and it's not worth the tax protection, yada yada yada. Especially to Chase's point, if you make less than 130,000, okay, 130,000 is a pretty good salary. I've never made over 100,000. I don't know what that would feel like. I don't know.
I'm with you,
I'm
Ryan.
also
I haven't
sitting on a
made that
half a
either.
million dollars of wealth. I'm a working man, right? So I've gotta find surplus capital in the budget. Okay. But for a lot of people out there, I honestly think the deficiency is arrogance. I do. I'm going to retire at 30 years. I want to be able to have access to my millions of dollars by investing in a Robinhood account and just hitting the lottery and having multi millions in a Robinhood account. That's just not going to happen. And I don't mean to, this is why I don't have millions of subscribers on YouTube, because I would rather seek the truth, not to profess that I know the truth, but seek the truth and not patronize people who are looking to fire at 30. If you want to do that, that's great. I'm all for it. I'm all for it. But to set out as a goal and you make a nominal salary, one that is eligible for a Roth IRA, i.e., less than $130,000 a year, why else? Where else would you justify going than starting with a Roth IRA? Why would you justify putting the horse before the carriage and starting a taxable account before a Roth IRA? I'm right. You can argue with me all you want. Okay. But until you can get up to that first 6,000 or 12,000, if you do end up wanting to, I don't know, maybe take on a spouse in this life, which is the best investment you could ever make, right? A partner in crime, take on a spouse and then you double it up until you can get to that point in your life where you can comfortably fund that. Then I'll tip my hat to you and say, go for the moon, baby. You're all
Yeah.
good. Start that
Mhm.
taxable account and knock your socks off with whatever it is you need to prove to yourself that you think that you can do to outpace the market to get that to that accelerated wealth, because the odds are that you won't be able to do that. And that's the hard reality. And a lot of people right now in these markets are getting kicked in the teeth, and they're learning a hard lesson. They really are. Got a rip,
Yeah.
Junior?
Yeah. No, I was just and it's just to end on that. Yeah, it's just I look at it as there's a reason why they don't advertise, in my opinion, they don't advertise the Roth IRAs in mainstream TV and social media and things like that. Like there's a reason why they advertise Robinhood. It's like a lion telling the gazelle how to get away. I'm gonna say that again. If they advertise the Roth IRA and the mainstream TVs or social media, if CNBC was adamant of just constantly talking about that, it's like a lion telling a gazelle how to get away in the jungle. I'm gonna just leave it at that. Think about that.
I
But
love it, brother. I love it.
Brian, I
Hey,
appreciate you, man. Thank you. And I want to tell everybody here on the live chat, you guys have a good night. I hope you guys got some value. Don't be scared if you're, worried. Just keep investing. Stay convicted. Do your homework. Stay convicted in with the stocks that you invest in, and you'll do just fine. Trust me, you'll do just fine. Have God on your side, and tell this to others. I love everybody here, and you guys have a good night. Happy Friday.
congratulations. Tell Ashley congrats for us, Junior. Thanks for coming on, my brother.
Thank you, man. I'll tell her.
Be well. Keep in touch, all right?
All right, you too, Ryan. Good night, guys.
All right, later, brother. All right, later. I always love when Junior comes on, man. It adds a little bit of dynamic to the live stream, and yeah, I'm a little harsh in my response, I guess. I've been doing investing for most of my life, and I've seen different schools of thought. And just like anybody, you can disagree with me. It's okay. It doesn't mean I'm right. Doesn't mean I'm wrong. It's just an opinion to be offered for the good of the group, and we want to make sure that we're offering information for the good of the masses out there. I'd love to have the secret sauce to tell you to trip and fall into your millions of dollars. I just don't believe that that's as accessible as some people would say that it is. And I would rather focus on those things that actually work, things that my private group benefited from hearing my thoughts on with regard to how to combat these markets, what to do, and especially what not to do. Very, very important to remain disciplined. I've got Avi in the house. Avi's been with me a long time, man. This is great. Long time. I've been able to catch the stream. I started following community in 2017, right? Helped shape who I am as an investor, and the principles Ryan teaches has helped me build. I really appreciate that, where we can identify those areas of success for people, especially when they've got a couple years strung together. Very, very powerful when people can make sense of this. And I certainly don't believe that you have to be the smartest person in the room. I just don't. Investing requires a special pedigree. And, some people you may look at and say, wow, they make a lot of money. They would make a great investor. Not so fast. I allow people to define their own level of involvement and define their own level of discipline that can render the success necessary in stock market investing. And it's super important to allow people that freedom and flexibility to understand that they can do it. And individual success is really what we're after in some cases, a small capacity. In other cases, a very large capacity. But I think there's successes nonetheless. And I think buffering losses to the downside for people is very, very important. How to take on a defensive posture in volatile markets like this, not to freak out. When markets do this, we're off 10%. It is entering into correction territory. This does happen. Rest on your program. You put the program in place, just like the boat analogy. Allow the boat to sail a little bit. Give it a little time, okay? If after 6 months you take an objective look in this and say, man, it's just really been a rough ride, okay. And then after a year, you look back and you give it 365 days of market action. And you look back and say, man, that was a rough year, you know? And then you give it 2 and 3 and 4 and 5. Maybe you ignore it for a while and you say, you know what? I'm tired of this. I'm not even going to pay any attention to it. Probably the best thing you could absolutely do is just to tune out of it. Focus on other things in your life that are more important. I talk about this all the time. Once you get the plan established, you're good to go. Rest upon the morals of the plan and you're good to go. Specky, it's great to see you and thank you. That was a special treat. I didn't know Junior was going to pop on, but it was nice to see him. And again, congratulations to Junior and Ashley. They're frequent guests of the channel and we really appreciate it. So congratulations to them. It was a lot of fun tonight. It's a special treat for me to do that as opposed to running the live stream by myself, which I do enjoy as well. It's no problem. I enjoy the different guests on the channel. It's no big deal. Money Master the Game. Thank you, Bob. Very cool suggestion. Very cool. I'm just cruising down the list here. This crazy market with elevated VIX. I have only day trading it. Caught the bounce this morning on QQQ. Sure. Posted in alignment. That's sure. I mean, whatever floats your boat, that's great. I think the level of devotion it takes to deploy a more active profile in the markets is, I could do it. I don't have the time. I work a day job. So it's great to have you in the group here and appreciate your comments. I like the opportunistic buys. Swing trading is about as close to I get in trading per se. But I'm certainly not using the technicals. If I were to engage in that more full time, it would absolutely be more on the technical side of it than the fundamental side of it. What I'm doing right now, I think anybody can do. I think fundamental long-term investing, and they're holding up quite well. We didn't get to do the portfolio reviews. All of my passive accounts are doing just well. They're holding right in there in the pocket, and we'll wait for a reversal in this market. There's no problem. I'm buying the market every single couple weeks. Some of my accounts I'm funding weekly with my dollar cost average schedule, and it's a lot of fun to do that. And Chase, thank you for your comments as well. I appreciate that. It's not how much you make, it's how much you can save. Oh, brother, if I could tell you how many times over that has been proven to me, especially over social media, you would be amazed. Maybe you wouldn't because you were the one that made the statement. But yeah, I tell you, it's amazing to me how many people I meet with money and they're a complete and utter disaster. Not only financially, because that can be fixed, honestly, but just as people. Money buys happiness. Again, I've seen it many, many times over. People with money and it consumes them. It owns them. It drives their decision making. It drives the way they act. They can't separate from it. They're always thinking about what it is that they need to do with it. It's like, go to the gym, pump some iron, go run, do some yoga, go swimming, play some guitar, read a book. I don't know, raise children, whatever it is that you do, but stop doing that because it's consuming you. I couldn't agree with you more. That's a very insightful comment. I could probably run an entire live stream on that very statement right there, Chase. And thanks for offering your comments. I really appreciate it. Gone a little bit over time. I'm cool with that. I really appreciate you guys. Obviously, when I have a guest, I don't really get to do my normal format, but it's always a special treat to have a guest on. For you guys that don't know, I do open up the gallery every single Friday. If you do want to be a guest on and just come on for 5 minutes or 10 minutes and say hello, do it. Get a little practice on YouTube. It's kind of cool to come on to a live stream audience. It's never perfect, but share your story, man. If you've got some successes to share and you think that you've got an angle on how you approach investing passively in markets and maybe using those tax advantaged accounts like we talk about, come on and share your story. I invite you openly. I provide this as an open forum every single Friday to provide the opportunity to share testimonials from people. It just so happens that I'm alone most of the time on Friday on the live stream, and I share my thoughts for the betterment of the group. I appreciate you, Scott. Thank you so much for stopping in. I really appreciate you guys. And for you guys that feel that way, I feel the exact same. I sure do. Very, very passionate about rolling this product out. High oil prices will bring a recession. Yeah, unfortunately, I think there's some merit to your comment. I think it's unfortunate that we're so tethered to such things. I think it's unfortunate, but we'll see how things transpire. We'll see how things unfold from a geopolitical perspective. Tough times right now, no doubt about it. That's I had to soldier up tonight. Yep, I had to soldier up tonight, guys. Be tough. Don't take what we have for granted. Don't do that. There's a lot of people that sacrifice to give you that gift. Um, don't take it for granted. Okay. Added to V as well. You bet. 3M, Johnson Johnson, Honeywell, Visa, PayPal, Facebook. There are opportunities for sure. There is no doubt. Medtronic, Adobe, CRM, Salesforce, Waste Management, Altria Group, all positions I've added to in the past week. You bet. You know, and the cool thing about M1 Finance is it allows me to just drop, let's say, $1,000 strategically into the account. It buys everything in the account, which is great. And I'm holding off doing that as of late, but it's getting awful tempting as the days and the weeks go by. But I actually think we're going to end 2022 on an up note. I know, I'm crazy. What's new? I actually think we're going to end on an up show. I'm reading Ben Carlson's A Wealth. Right on, man. That's great. I really liked Ben Carlson. I wish he would have been the president. He would have been one of many candidates I really liked. A lot of fun for sure. And Rebecca's in the house. I'm reading Unshakable. Awesome. Awesome. And your contributions to this community do not go unnoticed. Rebecca, thank you for your steadfast commitment to the channel. And you know that my focus is always on the individuals that make up this channel, and you're a big part of it. You've been with me a long, long time. Let's keep on knocking down those financial barriers, because your next is $250,000 and you say, oh, that's a big one, Ryan. I don't know, Ryan. You'll be there. You'll be there. VPU is doing great. It's a great specialty ETF. It's one of the few that I own twice. I do own it in my large Roth IRA account, and I own it in a very large position, respectively. I own the Triple Qs and the Vanguard's Dividend Appreciation Fund, VIG, that is complemented by VPU in that. It's an ETF that holds, I think, 58 or 59 regulated utilities. And it's a fabulous product. It's 10% year-over-year performance with a nice dividend yield to boot. In the other Roth IRA account, we've got supplemented with the VNQ, which is the real estate specialty ETF. And then I own both of them in my sector ETF portfolio. So I'm doubled up on both of those assets. I agree with you. It's a wonderful product. Lots of different ways to win in the stock market. And I choose to supplement with those two specialty ETFs in my Roths, my larger Roths, and it works really, really good. Okay, read hundreds of investments. I don't doubt you. You're a brilliant mind. I love having you in the group, Bob. I really do. I appreciate your involvement. I appreciate your commitment to the group, and I appreciate your insights. You're a friend of the channel and a friend of mine. What else can I say? Thank you for your service. I pay you the biggest compliment I can possibly pay you, my friend. You're a treasure to the community, and you always will be. Absolutely. Very cool. This is Graham Hancock. Okay, it's about money, but very interesting. Very cool. Nice to see you guys are sharing some opportunities. Win Moon for Hyliion, I'll tell you Sunday. It's amazing how these companies are kind of getting swallowed up and beat down even more. Hard to imagine these companies don't come out of here with some revived momentum, and I will be in the pocket to witness that. And for anybody who's with me on that journey, you get to witness it and experience it with me as well. All right. Microsoft is in the house, almost to the bottom of the comments here. I just want to scroll down. Man, you guys left a ton of comments in here. Very cool stuff. Avi, thanks for being the most consistent, honest. Yeah, I don't know any other way. That's just, there's a lot of honest people out there, man. Hopefully I set the example for the way people feel out there, you know. Uh, Sometimes over social media I watch and I just kind of cringe a little bit. And it's like, gosh, man, you got the world right there, man. It'd be awesome if you could just be a little bit more genuine. Hell, I don't know. I mean, you got 1.5 million subscribers. Just be genuine. I don't know. Throw a curse word in there every now and then. Say fart. Do it. It's okay. You're not perfect. I'll bet you do it every now and then. You know what I'm saying? It's all right. Be human being. Like I said, every single one of us are guilty of just that, and probably not being as perfect as we think that we are. Unfortunately, the idea is that you tune onto YouTube and they provide a nice solid 8 minute and 7 second video of just nothing but laughter the whole time. And I just refuse to do that. I won't do it. I can't do it. And that's just not what I'm going to do. Bob says he's waiting for the 2 hour stream again. No problem. I'm like a diesel engine, man. I can throw down. I don't want to overlap with the gents. I know that did hurt. I may go back to it. I don't really care so much anymore. I was trying to protect the integrity of the channel a little bit more before because it was hurting my channel. I just won a big battle today with YouTube specifically. And you guys don't even understand the half of what I go through to maintain this social media opportunity for me. And I don't do it for the money, obviously, because it's amazing. Making little strides every now and then, trying to do the very best we can. I've seen the Everclear boy somewhere, if it's not on Twitter, and absolutely, that's the key. I am too. You know what I mean? There's a lot of things that I want to improve upon in my life too. A lot of cool things, and life is good. Maybe we get there, maybe we don't, but I think the idea is that we're shooting for something better, and then that's really the key. There's no doubt. Cruise up here, very cool. High earners can have money problems too. Yeah, absolutely. They can also be some phenomenal minds too. Some of the best ones are the ones with money that actually can share how it is they got there, for sure. I'd want to have a business in Russia. Putin is, oh God, yeah. Try to keep that to a minimum growl tonight. There's no place for war anymore. Yeah, we're proving that wrong, aren't we? Pepsi and McDonald's soon to follow, I'm sure. Very cool. I got Michael in the house, man. I kind of cruised over your comment the first time. Much love. Thanks for holding it down. You guys hold it down yourself. It's all good. I just broker the business. It's all good. Ariana says, "Hi, Mr. Chartier." I always know when it's her when she says, "Hi, Mr. Chartier." Go make some pizza. All right. I appreciate you stopping by. Before I get out of here, I really need to try the best pizza in town. I do. I'm missing out, aren't I? Oh, it's all about the finer things in life. There's no doubt about it. Thank you, Ariana. Thank you for coming on. I really appreciate that. She's one of very few that calls me Mr. Chartier. I'm used to being called a lot more than that during my day. Hi, Chief. Hi, Chief. It's just okay. Enjoyed the stream. Thank you. Going on about 1 minute and 30, guys. Absolutely appreciate you guys. We will go ahead and wrap it down a little bit. We'll close it down and let you guys surrender to your evening. Thank you so much. It was a dynamic live stream tonight, a little bit more positive and upbeat than I was probably looking to hop to and jump into my element. But just appreciate the community. Absolutely. I got Dan in the house, man. Appreciate you coming on, and thanks for being part of the Viper group. Things are really advancing. Awesome for me. And I have 0 Patreon members. I started that just as a joke because I knew nobody would sign up. I was like, I've taught you well. I've taught you well, YouTube. There's no doubt about it. But for the people who know, man, and are part of the group and part of the movement, that stuff will pay spades someday. There's no doubt about that. We're part of something special, and you guys are just the top of the iceberg. And there's no doubt about that. So with that, guys, we'll start to wind it down. We will be back next Friday on the Independent Investor Channel live stream. Be strong. Remember your discipline. Do not sell in these markets. Stay strong. Okay. Remember why you entered into financial markets in the first place. Continue to dollar cost average the market, continue to save to cash, continue to focus on those things that actually matter in life. Okay. Because there's a lot of people in this world right now, as we speak, are suffering. All right. So keep your head about you, keep your perspective, stay tough. Walk around with your head a little bit higher because you do understand exactly what I was able to articulate over a 40-year investment time horizon for you. And I believe that should be common knowledge across all investors. Guys, thank you so much for tuning into the live stream. Have a great weekend. And we'll catch you next Friday on the fastest 60 minutes on YouTube. We'll take it easy and we'll catch you next week.